Very nice to see so many keen but probably concerned investors here today. Capital Mortgage Income Trust is a Wellington-based managed mortgage fund which was established in December 03 and today has grown to a size of $53 million worth of unit holder funds. It has an independent trustee, which is Trustees Executors, and carries independent ratings, the maximum ratings for the period of time that the trust has been in operation, Fund Source 5-star and a Morningstar 4-star ratings. The investments, the unit holders, the minimum size is a $500 investment and further investments may be made in $100 lots. The type of investments that the trust is seeking, they would suit the mid-term investor. They're not fixed. The funds are available on call, and that's a 3 o'clock daily call should you wish to withdraw funds. Having said it's at call, we would like to think that the initial investments would have a sort of a 3-month initial intention of being with us. Otherwise it becomes quite expensive if the people are withdrawing their funds too regularly. But the funds are at call, and the investment statement will say that we have the option, or we have the ability to charge entry and exit fees. The trust has no intention whatsoever of charging those and never has charged fees. The quarterly distribution, which takes place tomorrow at the end of August, is at a rate of 8.35%, and that is benchmarked against the bank's 5 to 10,000 term deposit rates, and the average of those is around 6%. So that shows the differentiation between what we... Sorry. We're paying 8.35 at the end of this quarter, which is tomorrow, and that is benchmarked against the bank's term deposit rates for $5,000 to $10,000 investment on a 12-month basis of around 6%. So that just shows the difference between our mortgage trust and what we benchmark against at the banks. The security for your investments, it is a pooled investment, so all the fund goes into a pool through the trustee company, and the security is only first mortgage security. So being a new product for Charter, I have brought out a full pack with a lot of information. It's got our current investment statement. It's got a brief newsletter about the difference between a managed mortgage fund and finance company debentures. It's got the key benefits of investing in the mortgage trust and some other information which I'll touch on very quickly. The security is only first mortgages, as I said, over land and buildings. The balance of our cash, we are required to retain a certain liquidity which stays in a registered bank or banks, and that's on a call basis with a registered bank or banks. We will lend up to 75% loan to valuation ratio, a term you've heard this morning, 75% max on residential security and 66% on commercial and industrial securities. Currently, our average loan is $300,000. The average LVR is less than 51%. So notwithstanding we can lend higher, and some of those loans do go up close to those max at 75 or 66, the average of our total book of 53 million is only around 51% loan to valuation and an average size of 300,000. We have the ability to lend to any one group up to a 5% of our unit holder funds, which is 53 million, but we're restricting the maximum loan to 2.5 at the present time, 2.5 million, but there's very few loans that would be well above the 1.5 to 2 million because of the size of the trust is only 53, so we're looking for a good spread. With approximately 46% of our lending book in residential securities, 46 in the residential, about 40% in commercial securities. Something else that the trust currently and will remain registered as a group investment fund. From the 1st of October, it has registered to become a PI, a Portfolio Investment Entity. A PI enables the investors, or most investors, certain tax advantages. And one of the key advantages is for income above 38,000, where that income above 38 up to 60 is from a PI or from PIs, then you'll be taxed at no more than 19.5%. That's the final tax, with the trust having accounted to the IRD for that tax. Again, there's a special newsletter in our pack out there, and I do encourage you to take it away and to read it in your own time. There's a full newsletter on the PI regime and the benefits, both at 19.5, 33 and the 39% taxpayers. The maximum tax for the next 6 months is 33% through a PI once we start in October. From April next year, that reduces to a 30% max. But there will be benefits for many people to earn up to 60,000 and be taxed at no more than 19.5.